Russell's been lagging a little bit, but it's not just the indices. Energies continue to push higher as well. The WTI this week to above 74.
Yeah, before we get into WTI, the thing about the NASDAQ is that we really thought that the top on the NASDAQ would be when everyone goes back to work, when everyone has been vaccinated. And the reality is that more companies, you hear about the ones that are forcing employees to go back to work, but there are an equal amount of companies that are recognizing that employees are very efficient at home and things like that, and that's a tailwind for the NASDAQ and for a lot of technology companies. So I think that's one that's a bit of a surprise, and it's causing this tailwind, and I think it'll drag up the S&P with it. So we are bullish on U.S. equities.
Phil, if I could just interrupt you before we get into that crude, as you mentioned, I wanted to get your thoughts because it's the NASDAQ, but not the FANG names right now. I've got a chart here, FANG Plus Index lagging a little bit. Does that concern you?
No, not really. I mean, it's been a shift, and you have so many of these users out here that are just targeting other components of the NASDAQ. Things that were trailing now are becoming the leaders. The ones that are the FANG index, those ones have all reached maturity on their cycle moving up. So we don't believe that you're going to see like new inflows into like Netflix and things like that. Google could continue to outperform, but the FANGs definitely are the laggers within it. So you want to do a little bit of allocation, look for those second tier names. Crude oil, I could tell you that traffic in Chicago is a nightmare.
Insane.
Especially around when businesses get out, and that's driving road transportation. We're at pre-pandemic levels in the U.S., UK, Spain, and other parts of Europe. So, as long as this Delta variant doesn't really grip and cause too many new lockdown restrictions, you're going to see that airline travel, TSA check-ins, and, the pent-up demand for traveling is going to continue to outstrip the supply that's out there. I believe we have like 459 million barrels versus 5-year average 493 from the EIA. You're going to continue to see that demand grow. The only tailwinds we see, again, Delta variant, and if OPEC does put some supply on, but that's not going to be, you have to watch those OPEC meetings, those July 1st, every monthly meetings for any kind of indication.
Here's a good look at the move we've seen to the upside. The breakout above 65, 67, we've really yet to look back. I just want to kind of put this into perspective in terms of where things stand, because we're right back to levels. This is a weekly chart now. We were looking at a daily. This is back to levels we haven't seen since October of 2018. Still some hurdles to get up above 77, 80, 100. Bank of B of A is calling for. But I want to point out a couple things here real quick. The reason we're asking about the crude move higher is because the indices are closely watched, the correlation related too, but also I wanted to get your thoughts on the dollar, which has been firming up some. The bid we've seen in crude in the face of a strong dollar really speaks to some of the demand narrative that you touched on there.
Well, the correlation matrix between them two are highly correlated. So you're seeing the dollar index, we believe, is going to continue to trend lower. A lot of the foreign currencies are going to catch bids. So we do like the downside on the dollar index. The correlation between gold and the dollar it's like 0.98%. So that's been impacting gold and been a real headwind against gold. But we do believe that the dollar index will roll back over. You've just got too much spending out there. We're still continuing to increase on debt levels, and we should see dollar index roll over.
Everybody's getting so excited about this dollar bid coming into play. I keep reminding everyone that we've yet to take out those March highs. Again, a significant move up after we saw or heard comments recently from the Fed, which was interesting because rates have come off. But let's talk a little bit about some of the other commodities that we're watching, because one thing that I want to pull this chart is, as we get your thoughts on it, copper versus crude, a little bit of a different situation that's been playing out there in terms of HG. Here you can see on the daily time frame, crude still continuing higher, as we just mentioned. That's the purple line here, but look at how copper's come off after 488, the all-time high. Found support recently around the $4 level, but should we be concerned here, Phil? Is copper, oftentimes they call it the canary in the coal mine, right?
Yeah, well, I mean, really, lumber was the one that was a canary in the coal mine. That collapsed. Yeah. You go to copper. Copper had that setback from China. We saw overnight China had said, yesterday copper caught a bid. They said that they released, X amount to the stockpiles, which was a little bit less than what was expected. And we saw that direct increase at the LME. So I think that we might have seen a bottom on the copper market on that washout. We should start to trend higher. We're keeping an eye on copper. Platinum's the other one, and silver. Those are kind of the three metals. And we already saw palladium, big inflows in the ETFs. So that could be leading the charge back up. I just don't think that copper is done with the rally. And I think that copper had given passed the baton to crude oil. Crude oil is the best indicator of a rising growth, rising inflation. That's the best market you want to be in. It's not gold, it's not silver, despite what people think. We've back tested this in every market regime. Copper leads out of pandemics, out of recessions, and then the torch gets passed to oil.
All right, real quick look at copper and the ES, because we looked at a little bit of a divergence playing out here in terms of crude and copper. Maybe not as extreme here in terms of the ES, so we'll see if copper does start to catch up, resume that uptrend that we have been seeing. Phil, last thought before we let you get on your way. A very busy morning here in terms of economic data. We looked at some of the numbers due out at the top of the show. Do you agree durable goods orders should be the most closely watched? Next in line, jobless, and then ultimately the GDP release?
Absolutely. I mean, we believe that all of them are going to beat expectations. GDP just slightly. However, we should continue to see that decline on jobless claims. You want to start watching economic data in August. That's when it starts to compress year over year, quarter over quarter. Comps starts to tighten. So we're putting some protection on the S&P 500 using end of month July put. It's broken put flies, real inexpensive. So that's how we're buying some protection, but we're going out and we're preparing for that decline. Jerome Powell also speaks late in July, so we want to be protected for that.
Okay, Fed speakers kind of changing the narrative as of recently, a couple at least yesterday. We'll keep an eye on that. There's a few today to watch closely as well. Phil, appreciate you joining us and giving us part of your Thursday morning, a busy morning that is. Phil Streible, the Chief Market Strategist at Blue Line Futures. We're going to